Well, thank you very much for joining us for what's part two of our Preparing Your Portfolio for the Election webinar. We understand there's some of you who caught part one and you're joining us for part two, and the others of you did not catch part one. So we're going to try to take into account both of those audience members and leave plenty of time at the end for questions. So if you do have any questions pop up, if you mouse over the bottom of your screen, sometimes depending on how you're watching this in Zoom, might be the top of your screen, go ahead and hit the Q&A button and we'll address those questions at the end. Now, last time we did this about a month ago. We're only 1 week from the election now. And a month ago, they were saying we were looking at the highest turnout since the 1960s. Now, the updated information based on voter registrations, early voting, polls, they're now looking at up to 67% turnout, which would be the highest voter turnout since the early 1900s. So definitely most people believe this is the most important election of their lifetimes, and they're really coming out to vote, or at least they're tending to come out to vote. Now, does it really matter? A survey done shows that both a heavy amount of Democrats and Republicans believe that it indeed does matter this time around. And you can see the bluish colored bar there. By far the most people this century that we've seen thinking that the election matters. When it comes to the stock market, 93% of investors believe that it matters, but the statistics do not say that it really does matter. And let me go through some of these because they can be a little bit misleading. First off, the average return over the 4-year cycle for each year is about 9.1% for the stock market. That's actually the long-term average return going back into the 1800s for stocks. And you can see different scenarios, whether it's a Republican president, Democratic president, Republican sweep of everything, and then a Democratic sweep, as well as a Republican president with a divided Congress, has all generated about the same returns over that cycle. The one outlier is a Democratic president and a divided Congress. And I think this is something that is interesting. And I've seen people on Wall Street using this statistic because they're saying, hey, look, the polls show a Democratic president and a divided Congress is very likely. And therefore, it's going to be great for the stock market. However, when you dig deeper into this, now remember, these numbers go back to 1789. We've only had 6 years since 1798 or 1789 where we had a Democratic president and a divided Congress. All 6 of those years came in the second terms of Bill Clinton or Barack Obama. As you'll recall, we already had a nice steady upward move in the market. We already had some economic growth happening. And so it was just kind of business as usual. Nothing could get changed from the momentum we already had. So that's why the stock market had some great returns, is we were already in a bull market and the economy was fine. The rest of the time, it's all been about average. So you shouldn't make your opinion, that the market's going to be better one way or the other, because the statistics say overall, it has not mattered who is president in terms of the stock market performance. Now, there are some things that we do want to focus on, and we talked about these last time, so I'm not going to go into all of the details again. But before I get too far into this, let's just remember a couple of things. First off, I'm a registered independent, so it seems like my job is to offend both sides equally. And I have a personal preference as to why I'm an independent, and I know each one of you out there has your own personal reasons why you're affiliated with the parties you are, or in my case, not affiliated with either. There is nothing wrong with your decision. We are all Americans, and the beauty of America is that every 2 years we get to go to the polls and we get a vote, and the consensus is shown, and that is our government. What I'm doing is coming from a data-driven perspective, because SEM is all based on data, is let's look at economically what Wall Street is saying as far as what matters in this election. And what I want to do today is highlight 2 contrasting things that we're seeing between the policies. And when I look at social media, I see that these are the things that are most dividing our country and some of the opinions that are out there. And that's the fact that Donald Trump has already lowered taxes, and he's promised to lower taxes even more. And then we have Joe Biden, who has said he's going to raise taxes on some people. If you listen to the commercials, it makes it sound like he's going to raise taxes on everybody, and maybe he will. That's the problem, is there's this unknown cost and benefit, as well as an unknown agenda that could develop. But the other thing at the bottom of the page there says, and this is, I think, critical, is no president gets everything they campaigned on. No president even tries to do it. I've yet to see one in my lifetime. The other side of things is the president can only do what Congress is going to allow them to do. So if Joe Biden has Congress on his side, there will be many more things happening that maybe is not priced into the market. Same way, if Donald Trump is president, he doesn't have Congress on his side, there's no way in heck he's going to be able to lower taxes again. That's just how it is right now in Washington. It really has been, for the last 30 or 40 years, is you only get what Congress is going to allow you to do. But let's focus on taxes and the cost of stimulus. Now, this is something that I've seen in different variations out on social media, and it's something that I addressed in the blog a couple of weeks ago. But I think it's very important to understand that while this is true for some people, when you see the Biden tax proposal, reading the whole plan, not very many of you listening out there are going to see your taxes going up under President Biden. Yes, they might be a little bit higher and they might be a little bit different than we see under a President Trump, but the majority of people are not going to be impacted by a tax increase from Joe Biden. Because when they talk about the corporate tax rate, there was a study done by Stanford, and it found that there was no difference in employment. In fact, they found that tax decreases actually encouraged more automating and different things from corporations after the Trump tax cut. So the tax cut at a time where we have record profits for the S&P 500, the stock market is near an all-time high. That's a logical place to go back up, and it's still not going to be as high as it was before President Trump lowered taxes in 2017. The income and payroll tax, this is only for people at the upper reaches, and you've heard Joe Biden say, unless you make over 400,000, you're not going to pay it. In fact, a lot of people don't realize with Social Security, after you've made right around it goes up each year, right around $140,000. You don't pay in Social Security anymore, and your employer doesn't pay in anymore. So highly compensated people don't pay into Social Security with a lot of their income. Joe Biden's plan says after you've made 400,000, you do start paying back into there. So there you're going to pay 6.2% of your income, and then this chart assumes that then your employer is going to have to pay the other 6%. The top tax bracket going up from 35 to 37 up to 37 to 39. So that's how, when they do this chart, they get to 52%. Again, a very small fraction of people. Small business tax, I really had a hard time. I know the narrative is out there to understand where they're getting these numbers. I think it comes down to, again, high net worth people who own small businesses are going to pay more in small business tax. But for most small business owners, they're not going to see an increase in their taxes. And then finally, the capital gains and dividend tax. That's a huge jump. 43% would definitely be concerning. However, that is only if you've had earned income over $1 million. Then you would pay at your normal tax rate. And that can have consequences on the stock market as people try to make adjustments and basically move forward their capital gains. But for most people on this call, it will not impact them. So we do have to understand, I personally do not like paying more into taxes. I don't like anybody having to pay more into taxes. But these are places where I believe the Biden team has looked and said, where logically can we raise some revenue and try to get revenue up. The problem that we're going to be dealing with is, what does that revenue go towards? I am okay with paying higher taxes if I'm seeing it being invested into future growth. The issue is, we haven't had enough people benefiting in this economy. We've literally seen what I've called the K-shaped recovery, and that's we've seen workers who can continue to do their jobs at home, businesses who can function without having a physical presence. They're actually better off now than they were in February because of the stimulus via the CARES Act and things like that. So they don't see an issue with the economy, and they're thriving. And by the way, most people in that upper part of the K will not, under the Biden plan, pay more in taxes. Others, the higher net worth people, obviously will. The issue that we're dealing with as a country is that bottom part of the K. And the latest statistics show about 2.1 unemployed people for every job opening. A month ago, it was 2.3. So we've seen a tiny fractional improvement in that number. So people who lost their job because it can't be done at home and the demand just isn't there, they're struggling. And the issue, whoever is president for the next 4 years is going to have to figure out a way to balance that. Of you want to bring up that lower part of the K without hurting the upper part of the K too much. And so that's where the struggle has come in, of where can we find areas to kind of redistribute it without hurting the overall economy. And as an independent, I don't know. I think there's a few good ideas on both sides that need to be used, but there's not going to be one simple bill that can fix this disconnect that we're seeing in our economy. And the longer this disconnect goes on, the actual worse it's going to be for the stock market and the economy overall. But the math problem that is facing whoever is president and whoever is in Congress is simple. And I put a chart up there that shows the spending and then the revenue is the bottom line. And you can see, going back to 2000, that we've been running a deficit, and you can see the financial crisis and the spending there, and the revenue never made it up there. But if you zoom in and look at it, and I put that box there, this is during the Donald Trump years. You could see the revenue going down via the tax cuts, but the spending didn't really go anywhere. In fact, it's slightly higher pre-COVID than it was when he took office. So the president cut taxes, which is a good thing in my opinion, but then he never offset that with spending, and the economic growth was never enough to offset those things. And then of course you see the spike with the pandemic. The problem we're having with the Joe Biden plan is there's $3.4 trillion of estimated taxes. I've seen other economists say, however, those taxes are going to knock off a little bit of GDP growth at the top end. So we probably would only see $2.8 trillion of revenue because we're going to have a lower economic output than is currently projected. But we're looking at $5.4 trillion of spending. And obviously the math just doesn't work out. You're taxing the wealthy, but you're spending more than you're bringing in when we're already running a deficit. So that's going to be something that I believe, depending on the mix of Congress, is going to just have to be solved, because you can't just spend $2 trillion more than you're taking in over the next 10 years without it causing other economic consequences. And so if we go back and we look at the zoomed in chart, under current law, we were going to be running a deficit. So with the Trump tax plan and the Trump budget, we were going to have a deficit. This chart then illustrates that it's an even bigger deficit. He brings in some revenue under the Biden plan, but because we're spending so much, we have a big issue. The other math problem that the candidates are facing, though, is we only have 3 places we can cut when it comes to figuring out how to balance the deficit. And again, this is before we look at the new Biden plan. Is the biggest spending items in our government are Social Security, Medicare, and defense. And we've not seen any candidate willing to step up from either side to address these things. And then the spending on those, because we're not bringing in enough revenue, which is the dotted line on that chart, means that our interest expense continues to grow up. That's our 4th largest spending item. At current projections, somewhere in 2025 to 2027, interest expense is going to surpass defense spending in our budget. That's something that has to be addressed by both parties. And right now, as you saw, if you go back to that last chart, is the status quo under the Trump plan means we're going to just keep running a bigger and bigger deficit. The status quo under Biden is we're going to take the current deficit and we're going to make it even bigger. And by the way, none of us wants to address the Social Security, Medicare, or defense spending problem that we have. I don't know the answer. It has to come from both sides. And right now, neither party cares to address that. And what's from an investment and an economic standpoint, right now, Treasury bond interest rates are historically low. They've come back up, but we've seen examples in the history of our country. World War II, the 1970s, we even saw a small fraction in 1994, 1995, where the bond market just said, look, you cannot keep spending money like you are, and they spiked interest rates up. That then just starts to become a very difficult problem, because if the US sees interest rates going up on their new borrowings, then they're going to have to, you're going to see interest expenses exploding, and you're going to have to find places to cut. And if we don't address this, the only places to cut to get the deficit under control are places that literally can hurt a large portion of our country, and that's Social Security, Medicare, and defense. So the longer we delay fixing this, the bigger the issue is going to be. And neither candidate, like I said, has put this on their platform to address. The math, though, the Social Security Trust Administration says pre-COVID, this is before we saw payroll taxes decline and Social Security benefits go up. Pre-COVID, Social Security was going to be running out of money somewhere between 2035 and 2037. That means the trust fund is gone, and the revenue coming in from current employees is not enough to cover benefits. By law, they have to cut benefits, but until it gets back into balance. You don't want to be retired and have your benefits cut. But the bigger issue is Medicare. Pre-COVID, Medicare was looking to run out of money somewhere in 2024, 2025. That's really soon. That is the next presidential election. Medicare, without any changes, is going to run out of money. Nobody is telling you about that. They're too busy fighting about all these different things that they're missing a huge issue that is an American problem, not a Republican or a Democrat problem. They both got us here. We as Americans have to educate ourselves and realize that we can't focus on our ideological issues when we have such a huge, important program such as Medicare and Social Security that is heading closer and closer to running out of money. So whoever you affiliate with, start talking to your Congress people about fixing this problem, because it is an American problem. Now, let's go back to the current term. Sorry about that rant there, but it is something that is very important long-term to the economy, and it is going to start playing a bigger role in politics. I shared this last time, and I still think it's fascinating, is most people in our country identify as independents, more so than any other party. Yet the independents don't have a party to call their own, so they end up having to pick and choose one. And we've seen this happen before. If you look at just the leaning of independents, what I think is interesting is May of this year, the independents were heavily leaning towards the Democrat Joe Biden, as well as in the Democratic senators. Now we've seen that gap close as of the end of September down to just 3%. So the independents are going to be the ones who make the final decision of who the president is, which way they vote. They're going to decide who is in Congress. That's going to be key, and that's going to make it harder and harder for the pollsters to get it right, and it's going to be harder and harder for Wall Street to price in what's happening with the election. I talked about this last time. The younger you are, the more you lean towards independence, and you could see the Republican Party definitely has a younger generational issue. Is 25% of Gen Xers, and you got to remember, the Gen X generation now is into their mid-50s. So you can't just argue and say, well, as people get older, they become more conservative politically. Gen X is old. That generation is 10 to 15 years from retirement, and they still do not identify enough with the Republican Party. You still have 40% of Gen Xers almost as independents, and then of course millennials are very, very much so independent. So That's going to be a demographic issue that we're going to start to see developing in 2022 and 2024 for both parties. But what to expect? Let's take a look at an update on the polls. I put a line there for the date of the first debate. And you can see that since then, Joe Biden has extended his lead by about 1% nationally. But as we learned in 2016, the national polls don't really matter. What matters is that the state polls are still saying that it is too close to call. However, unlike 2016, Trump is losing in a much bigger margin as far as the electoral college guaranteed votes are. So it's something like 85% of electoral college votes are pretty much assured to go towards the Democrats. But there are a lot of swing states up for grabs. And as we learned, people can go either way, especially if you have so many independents still undecided as far as which way they're going to go, voting wise. The other thing, I updated this data from our webinar a month ago. And what's interesting is 44% of the people saying they're going to support the Democrats are planning on voting by mail, and only 11% of them are planning to vote in person, versus 36% of those planning on supporting Republicans voting in person, and only 9% by mail. If you look at what's going to happen, so that's 53% of the ballots are expected to be mail-in. That's going to be a mess because they're not counted all on election day. You can see a lot of rejected ballots. We're already seeing fights about rejected ballots in a lot of different states. That's going to be an issue. Whereas in-person ballots, 47% of the people are planning on voting in person. Those are what we're going to see reported on election night. So as I said a month ago, we very easily could see President Trump clearly leading in the early results. But then as the days continue, we're going to see ongoing battles as far as recounts come about and different questions on ballots come about. So it's something we need to be really cautious of. I put this chart up here just as a reminder. 2000, we were only talking about a few counties in Florida where we were having to go through recounts. We could be looking at the entire state of Pennsylvania not knowing the results for a week. And they're one of the biggest swing states out there. You know, there's some questions on Michigan's ballots. There's some questions again in Florida. You know, there's a lot of questions on the ballots, and if this goes to court battles, we could see a lot of volatility in the stock market. That's something we have to be careful of. But looking at the Senate, this to me is going to be what's most important as far as market volatility goes, because we need to know who's going to be holding, basically controlling what happens as far as new laws go. If it's clearly in the hands of the Democrats, we're going to see one reaction. If it's clearly in the hands of the Republicans, we're going to see another. But if it's going back and forth via more battles in the courts, that's going to be a bigger issue for the stock market. So our election plan has not changed based on the things we've seen happening so far in the last month. However, from talking to some different Wall Street insiders, there are some serious financial planning things that may need to happen once we know for sure if the Democrats are going to control Congress and the White House. Because there is a push already being put out there on the Democratic side to make any tax changes retroactive to January 1st. We just saw what they were talking about capital gains wise for wealthier people, losing itemized deductions, having those phased out. There's a lot of things that you're not going to know the laws, yet you're going to have to try to make plans. Now, that's a financial planning issue. So if you don't have a financial advisor, please reach out to us. We will get you in contact with one that we work with in your region, because having a financial advisor, whether you're just starting out in your working career, or you're getting very close to retirement or already retired, is going to be critical no matter who wins, because we do have a lot of issues that we're going to be facing. So that's my plug to financial advisors out there, is you need a financial plan. That financial plan is designed to work with the investment portfolio that we manage at SEM. And we watch the data, we watch everything that's happening in the market to make our decisions. And I'm not going to go into all of those details on this call, we've talked a lot about it over the last few months, is we proved during COVID, we are ready for anything unexpected to happen. We're ready for things to expect. But what's critical with SEM is we don't let our opinions, political or otherwise, influence what we're doing with the stock market, which brings me to my final quote before I turn it over, and get this drilled into your head, because if we are going through court battles, it could be a very scary time for the stock market. We will take care of that. If you're not an SEM client, we would love to get a hold of you pre-election or even post-election to help you sort things out with your portfolio. But don't let your political opinions influence your investment decisions. I showed you the data. It really doesn't matter over the long run who is president and who's in Congress. The market tends to sort it out and get to where it needs to go. In the days, weeks, months after the election, stay tuned to the blog semwealth.com, because we're going to be facing all sorts of uncertainty, whether it's President Trump and a Democratic Congress, Joe Biden with a Republican Congress, or a Democratic Congress. There's going to be issues, and it's going to be very different than the last 4 years that we've been facing. So with that, I am going to end the formal presentation. As a reminder, the Q&A button is there for you to ask your questions. Get them in. It looks like we have a couple already. Let me see what we've got. And so the first one, even if Biden's tax plan doesn't include a planned tax increase for those under the highest tax bracket, would a repeal of the Tax Cut and Jobs Act inadvertently cause an increase for those in the lower and middle tax brackets? So that's a very good question. And one thing that I think is going to be critical is the economic impact, because right now it looks like, again, on paper, they're not raising taxes. The Biden plan has some things to basically keep the Trump tax cuts, or the formal name was Tax Cuts and Jobs Act, in place for those under a certain bracket. However, say Congress repeals one but doesn't enact the other, that could definitely lead to a huge tax increase for it. Or say not all of the parts of the Biden plan go into effect, and now people lose the big standard deduction that was put in under the Trump tax cuts. That's definitely a possibility of we could inadvertently see something that happens when Congress acts that causes everybody's taxes to go up. Again, it's going to be critical to really watch your tax situation and try to pre-plan ahead as much as you can, not knowing what's going to be out there. The tax laws are so convoluted. It's one of my biggest frustrations. That it can become so complex. But yeah, what we see often is one change can cause a ripple effect down the road that people don't even realize. One example of that is a lot of people don't realize that the only way they were able to get these tax cuts through is to make them only temporary tax cuts. So either way, they were going to expire in 2025. But then we see some things extended. Well, that causes cuts to other programs, and they're so intertwined that, yeah, Congress could definitely misstep, as this person asked. Next question was, what do you think is the best solution for bringing up the bottom of the K without impacting the top? Job creation needs to happen, but whose job creation plan, if both sides have a job creation plan, in parentheses, will have the least negative impact, and how would it be accomplished broadly? First off, I think, to me, and as much as, again, I like people having more money, cutting taxes in the middle of an expansion, and I said this at the time they happened, under the Trump tax cuts on the corporate tax side, without incentives to bring jobs here, did not create any new job growth. And like I said, Stanford did studies of this, and there was actually a slight decline in the job creation pace than before the tax cuts. So the part of the K that probably has the easiest place to cut, and would be combining the Democratic plan and the Republican ideas, which is, let's take the corporate tax rate back to where it was. I'm not even back to where it was. Let's move it up a little bit, because remember, it was 35%. Biden's plan has it going to 28%. But let's also offer tax cuts to those American companies, or even foreign companies based in the U.S., creating American jobs. Don't just give them a tax cut and then say, go ahead and pay their dividends. We need to have that incentive. So we'll raise your taxes, but if you create jobs here, we're going to actually lower your taxes. I think that's the best chance. The other thing, tariffs, as I mentioned during the call a month ago, they're one way to do it. We have to address our trade imbalance. It caused some short-term pain and volatility, but finding different ways of incentivizing companies to create new jobs here, build their stuff here, has to be a part of either plan. And it's talking points on both sides, but we've not seen either of them follow through. They've had their chances, but President Trump had his chances the first couple of years where he had control of Congress, and President Obama had his chance when Joe Biden was president. They had a few years where they controlled Congress, and they just didn't do it. Infrastructure plans, the President Trump talked about that, and it, for whatever reason, never came to fruition, never made it to Congress. True, like this is a cringeworthy buzzword that was used under President Obama because it never really happened, but an actual shovel-ready project where we're employing U.S. workers at higher than minimum wages to build things, whether it's an internet infrastructure build out, or it's our crumbling bridges. It's unreal to see the condition of some of the bridges when you cross the country, but legitimate things to put people to work. Is a Republican and Democratic idea. They both put it out there, but for whatever reason, we're not seeing it ever get into law. So on the surface, minus going back to the other person's question about, hey, we might actually hurt everybody if we just completely repeal the Trump tax cuts, cutting off the fringes of those who are at record highs, and then investing that into jobs programs is really the only way. It's not going to be an overnight fix, though, unfortunately. We have an education problem in our country of we just don't have enough skilled workers to do some of the jobs from the baby boom generation, skilled workers who are retiring. There's that gap, and getting them there is not something you can do overnight. Now, there are 9 to 12 month programs at community colleges that we can incentivize people to do. We can have employers get tax cuts or tax credits for putting people through those training programs. There's all sorts of things that can be done, but getting both sides to come together and say they're a good idea is going to be the tricky part. And I know that was a rambling way to answer the question, but there are ideas out there from both sides, and they involve taxing those who are just at record profits, but then still giving them incentives to help create jobs in our country is really the easiest thing to happen. One more question, unless we see another one pop in, and I've seen a couple on this, of how will potentially striking down of the Affordable Care Act affect us? That's loaded, because there's a lot of ways it can affect us. My dad is a cancer survivor and going back through treatment again. So to me, the biggest issue, and I didn't read fully into the executive order that Donald Trump signed, but the pre-existing conditions exemption, my dad couldn't get insurance, and as anybody who's gone through cancer treatment knows, it's so expensive. I don't know how you'd get, you just end up dying of cancer, I guess. I mean, but from an insurer's perspective, if they're forced to cover these very expensive insurance or cancer treatments, and they have young people not getting coverage because they think they don't need it, that becomes an issue. So I think the Affordable Care Act is a political thing, and there's, I believe what's up for the Supreme Court that this person's probably asking about is the mandate that you have insurance, being up there and getting rid of that. That can be a big hit to the insurance companies because again, now they're stuck covering these high cost things, and yet they don't have any premiums from people because they're not mandated to get insurance. And I, as a company, SEM, from the beginning, we've always paid 100% of our employees and their families' healthcare insurance. And that was our personal choice. We wanted to offer benefits. We want to feel like SEM is a family. And if you look at the longevity of our team here at SEM, it's something that is we're proud of. They're our family, and we want to do that. So this was all pre-Affordable Care Act. Our premiums are up now about 250% since the Affordable Care Act went into place. Our coverage has gone down. It's at least half as good as it was. So the question is, what is the impact, overall? I think it depends on your situation. Of here, we were doing what we felt as a small business was the right thing, but we're paying the cost of that so that everybody could do what we were already doing. And at the same time, people like my dad who couldn't get insurance now could get insurance. So it's not an easy thing to do, but it will definitely cause some sort of unforeseeable consequences if it is struck down by the Supreme Court, just as it caused unforeseeable circumstances to those people who, when they enacted it. And that's the problem we're dealing with in Washington, is we're voting black and white of this party is in favor of this party is against it, but they forget there's a whole bunch of people in the middle that aren't in that exact situation. And I think that's what's critical with everything we're talking about on this webinar. And I'll just do a quick side note here, because I talked about Medicare. This ties into the Affordable Care Act. I always thought Affordable Care Act was an oxymoron because it did not look at the cost of health care. If we've seen the jokes, but it's not a joke if you have to pay it. When you get charged $100 for a dosage of Tylenol that you could have bought, at Costco for $12 for a giant bottle. The Affordable Care Act did not do anything to address the cost of it. Going back to the previous question, what can we do to help shrink that K without hurting people? The cost of college is ridiculous. The reason it's so ridiculous is the US government made it easy for anybody to borrow money to go to school. Before the government took over the student lending industry, banks were in charge of student loans, and banks looked at it and said, if you're going to go to get a degree that at best is going to pay you $22,000 a year, we're not going to give you a loan for that. You need to figure out a way to pay that out of pocket. When the government took over student loans, everybody got all this money. And then colleges thought, great, we have a willing payer that'll pay us anything. So we're going to, go and, charge whatever we want and pay our faculty whatever we want. And, back in 1998, when I graduated, my entire 4-year education cost $20,000. My in-state tuition for my 2 kids who graduated from University of Arizona, $15,000 a year. I don't, they got a good education, but it's not as good of an education as I got. It's not that much better to be looking at $60,000 versus $20,000 in a matter of 20 some years. That's all part of how do we make college affordable? Well, it's not you just make it free for everybody. It's not like the Affordable Care Act, you just make it easier to get insurance. You got to address the root cause of the problem, which is how much does everything cost, and does it really cost that way, and is there ways to fix it? And that's, I'm a huge believer in our country, and I think we're going to have to do sometime in January, after things have kind of settled down from the election, of um, the social cycle. I've showed the demographic shift we're seeing as far as the political affiliations. I'm a big believer that our country is going to not be so polarized and come closer to the middle, and we're going to get together to solve these problems. We're going to solve the Medicare problem. We're going to solve the Social Security problem. We're going to shrink that K without hurting people too badly. Make things a little bit more opportunistic for everybody equally, without, again, hurting or offending people unfairly. And the millennial generation and the Gen X generation is about to take over leadership. And if you look at them throughout their lives, they've found ways to come together and solve problems down somewhere in the middle, a little bit from both sides. So I know I really rambled with these questions, but that's the fun you get when you have live Q&A. I hope I answered it. Again, I don't want to offend anybody, because I love conversations with the staunchest Democrats and the most fierce Republicans. Is I want to hear why you think the way you think, because when you get right down to it, we all love our country. We all want what's best, not only for us, but our kids and our grandkids. And I think if we're all honest, we understand we don't have the only answers. From an investment standpoint, none of anything I said regarding this Q&A session matters, because we're going to follow the data. Wall Street likes to go where the money, where they think there's going to be opportunities, they go. We choose to follow the money. We only follow the data. We don't question whether, politically we agree with it or not. That's the way we've managed money. Our key is working with other financial planners to make sure that we're not taking on risks that we should be taking, but also making sure we're meeting the overall objectives for the money. So thank you for tuning in, whether it's on Facebook, the Zoom thing that we're trying live. We're so appreciative of that. Stay tuned, because no matter what the results are, we're going to do a post-election wrap-up, because then we will know a lot more things about what we're likely to see. So thank you for tuning in, and stay safe, stay healthy, vote. Your opinion, don't let anybody tell you you're wrong for the way you're voting, because you're an American and you can vote however you want. So thank you again.